Hello, everybody. This is Toby Gennaro, and kind of getting set up here for our Tuesday market mover session. And glad you folks can join us. Looks like we have a decent crowd on this morning, so we'll get to the charts here as soon as we can. Before we do that, let's, as we normally do, let's make sure we do a sound check. You guys can hear me loud and clear, and everything is coming across via the wire as far as video. So if you guys are getting all that, just let me know via the question box on your screen. Kind of shoot me over a little electronic high five, and then we'll be able to jump into the content here and get to the charts as quickly as we can. Great. So it looks like we're good on the technical side. So we've got the recording rolling. Let me just do a formal introduction here, and we'll jump to the charts. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for this morning. The topic for today is going to be on live technical analysis. So I'm going to be talking through a series of specific trade setups that we're seeing in real time in the charts that we're looking at today. For those of you that are on the live webinar, if you have questions during the session, you can type those into the question box on your screen. So I may be asking you guys some questions as well. So we'll try to keep this interactive. That's really kind of the whole idea for the next for the next 60 minutes. And just by way of formality, let me put up this risk warning and disclaimer as we normally do. I'll leave this up for about 30 seconds or so. If you can just have a quick read through this, that would be good. In brief, what this is saying is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody, everybody good with the disclaimer? And then one more disclaimer here from Nadex. Just leave this up for a little bit. You guys have a quick read through this one, then that'll conclude the disclaimers, and we'll jump in for the content. All right, so let's get started here then. You can kickstart your trading every Tuesday morning with this regular feature from the trading team at Trade with Precision. And with so much going on in the markets each and every week, how can we spot opportunities across multiple markets and across multiple time frames? It's always the big question that we're trying to answer. So join us weekly for this insightful live webinar, where we will focus on technical and trend analysis across major markets to help identify and answer this question. So let's go ahead and jump into the live charts here, see what kind of trading opportunities we can find for today. Before we do that, I took a look at a few charts in advance this morning that I thought would be good to consider for potential trading opportunities today. So let's go ahead and take a look at some of those. We'll look at the index markets, the S&P 500, and the Nasdaq, and then we'll look at the dollar CAD. And then beyond that, we can do a little Q&A together, and if you guys have some other markets that you want to look at technically for the last half an hour, we can do that as well, okay? So let me just get my my charts set up here so you guys can see everything. And we've got the charts, and we've got the Nadex contracts. We'll take a look at those as well so you guys can see everything. All right, so we're looking here at the ES contract, which is the futures contract for the S&P 500 index. And we're looking at the higher time frames, actually the highest time frames that I look at, which would be the monthly and the weekly. And so what I'm really concerned about are a couple of charts here, really the monthly, the weekly, the daily. The top three charts is my primary interest, and I'll tell you why. First of all, on the monthly chart, anybody who's been watching these charts knows that we don't get pullbacks into the moving average zone on the monthly chart except once in a great while. And usually when it does pull back into there, there's usually a lot of news to go along with it. And that's why you get these longer consolidations of, anywhere from 3, 4, 6 months, or maybe even a little bit longer before the market actually takes off and does its thing again. So you can see every time we have one of these, it can be almost several years in between, actually. And we're actually getting, the last time we had one was back in 2016. Here we are, middle of 2018, and we're just getting a pullback right into that 10-period moving average kind of right in the middle of that 10-20 period. And then we launched from there, broke above the highs of these couple of candles here. And it looks like we're moving back up into this flat level that we can see right here on the weekly chart. And as you can see here on the weekly, everything fanning out really nicely as far as the moving averages, the 200 period, the 50 period, the 20 period, the 10 period, just like on the monthly. And with the difference that we have a nice swing low in here, and that was part of that pullback on the monthly chart. And then we've set up some pretty nice rejection candles here. These two primarily, once we broke out of there, we were kind of off to the races, actually set up another rejection candle, and then came up here, touched that level again, and then pulled back just slightly, set up another bullish candle for another trend flow trade, and then we're bumping back up against that level again. So now we have we have 3 touches at that level right around that 2,800 mark. And at this point, it's difficult to tell with the candle setup right here to see if we're going to bust right through this and head back up to 2,900, potentially put in a higher high, or if the market's going to pull back slightly again and then move back up for a 4th touch. And then what I'd be looking for either here or on a 4th touch is a consolidation here of small candles just below that flat level right there, and ready for that would tell me that an imminent breakout higher would be in the cards. Now right here, just looking at the charts on as far as the indicators are concerned, we've got higher highs on the indicators as well, and as the pullback occurs, we also get a pullback on the indicators as well, which is fine. As we set up that flat level, you can see that there's a flat level here along with the indicators, and that's all fine. That just means that the indicators are moving in sync, or they're just mimicking what the price action is doing, and that's exactly what we want to see. As long as we're putting in higher highs on the price action, we want to see higher highs in the indicators as well. If we start to see lower highs while price trends higher, then we have the price trend doing this, and then we have the indicator trend doing this, and that's called bearish divergence. So we don't want any kind of bearish divergence on a setup of a flat level breakout like this. Okay, so that's how we look at that setup. That's how we identify it. You can learn that in the advanced education course. We'll show you all the ins and outs of that as well. Going over to the daily chart, we can see how we're right back up to that level, touching it pretty much on the nose. We've got a little overextension from the moving averages, but pretty much everything fanning out really nicely there. So at this point, we could get a pullback here on the daily chart that looks more imminent than it does on the weekly chart. If we did get a pullback, I would estimate potentially maybe a 50% retracement of this move from the swing low to the swing high, which might put us right in around that previous resistance or support level right here. And if we got a pullback right back into there and then a move back up, then that would pretty much be our 4th touch as far as this flat level is concerned. So we can see here that with all the highs that we're putting in here and all the higher lows that we're putting in on this trend as well, we've got higher highs on the indicators as well, which is very good. Now, if this one breaks up a little bit higher, we're going to have some serious divergence here on some of the indicators. So we'll have to see how that pans out. Here on the 8-hour chart, pretty much the same thing, a little bit of overextension. So I'm not interested in really engaging the markets here at this point. I'd be looking for potentially a pullback on some of these charts. If we go down even further, we might see where those setups might be occurring. As you can see, we got just a little bit of a pullback here with a nice bullish candle and then a breakout above that candle. If we go down to the 60-minute chart, probably the same thing. We've got some nice bullish candles right in there, a breakout, another rejection candle headed higher, and you can even see that second touch of that flat level setting up even on a 60-minute as well as a 30-minute chart. So it looks like we've got some divergence here on the 60 and the 30. So we could get a little deeper pullback on some of these higher time frames like the 120, the 240. Back into that buy zone would be a little bit more appropriate for my taste as far as engaging this trend to the upside. And so that's pretty much what things are looking like. I think you guys can see that pretty clear. I'll get in one thing right here for you, and we'll put in a nice line for you right there so you guys can see that. Put a little color on that. And that's really the line that we're looking at, right dead at right around 2,800. So if we can break above that level and get a hold by the end of this week, that would be a great inclination that this market is moving higher, at least up into that 2,900 level. I'd probably expect a lot of sellers in at the 2,900 level because we're probably going to put in some pretty steep divergence on the weekly chart once we get there. But that all remains to be seen. Right now, we've got a setup right in front of us, and that's kind of what I'm looking at. Now, some of you guys might be thinking, hey, we're trading Nadex binaries. A lot of these things are very short-term in nature. Toby, why are you telling me about a weekly setup that's taken, years or it's taken, weeks for this thing to set up? How's that going to help me? Well, I'll tell you, the way that it really helps you when you identify these setups on the higher time frames is it enables you to trade the lower time frames with agreement from the higher time frame trend. So by looking at this higher time frame, we automatically know where the key level of resistance is, which is right around that 2,800 level. So if you're just trading 1 and 2 and 5 minute charts, you're not down there catching a little bit of this trend right here and all of a sudden, trying to get long right at that 2,800 level. If you're looking at these charts, automatically, hey, 2,800 is a point of potential reversal. We might get a breakthrough there, but there's no guarantee. We could get a reversal off that, another pullback, and then another move back up. So, trading up into that 2,800 on, some intraday trades would be a good idea, and then closing out your position at that level of 2,800 for intraday trades, that would be a great level for me as well. And so that's kind of the way I look at these. So it doesn't mean that this is going to break out today or even break out tomorrow. I mean, this could take several days before it actually breaks this level. And so other clues that we might get, it could consolidate here for a couple of weeks, and we could get some small candles right up against that area. That's always a possibility. So the breakout is not imminent at this point, so we can't just jump in and all of a sudden start buying a bunch of contracts thinking we're going to break this level and we're going to be at 2,900 by the end of the week or by tomorrow. That could be the case, but there's just no guarantee of that. So we always want to make sure that we understand the trade setup, understand what's happening on the higher time frames, so then when we go down to the lower time frames, now we understand what this level means right here at 2,800 and why it's such a significant level, and that we're not just buying these trends higher without understanding where the next level of resistance lies. So that's always very helpful from the higher time frames, and then the fact that we have some nice setups here on the monthly chart on this pullback and some bullish candles and the breaks of the highs, and looks like we're moving higher once again. All of those things very good and very indicative of a move and a trend higher. Let's take a look at one other index. We'll take a look at the Nasdaq real quick before we get to the Nadex binary contracts. Now, looking at the Nasdaq, I like to do just a cross section of the index charts. Usually, the Nasdaq with technology has been so hot lately. Technology and services, that's what comprises this index primarily. I always like to look at that as a cross section of the larger S&P 500 to see kind of where we're at and if we get some agreement on between these two markets and the charts that we're looking at. So here we had the same thing, a little bit of a pullback, but as you can see, really about 3 months worth, not as long a pullback as the S&P, but we got a quick little punch up out of the buy zone there. Nice solid candle there, and then a break up to a new high. And so we're actually within the last 3 months, we're right back up now to the previous high, which we're still quite a ways away on the S&P. We're about 100 points away from that high at 2,900 on the S&P, but on the Nasdaq, we're right back up there, and it looks like we have a nice candle here right in the zone on the weekly chart for a trend flow trade. We've got a break of the high. We're moving up into that level. It looks like we're going to shoot maybe right past that level and take a run potentially at that 7,500 level. The only thing we have to be concerned about once we break this level right around 73.65 is we've got to take a look at some of this divergence that's happening here. This divergence can happen for a long time on some of these higher time frame charts, but it doesn't mean that I don't pay attention to it and I don't understand, what potentially could be happening here in the charts. As I go down to see how much of that divergence extends across the time frames, if we get back up to this level, we're going to have some pretty steep divergence on the daily as well. So now we're going to have some divergence across the weekly, the daily, potentially the 8-hour. As you look at these charts here, we have higher highs, and we have lower highs coming in here, and potentially even a lower high from back here if we put in even a higher high above the ultimate high. So some things like that to watch out for if we get a lot of bearish divergence being created around here and then a lot of overextension from the moving average zone. That's usually a typical place on the chart that's ripe for a pullback into the buy zone for us to see potentially what the next move might be. So on the higher time frame charts, we're in a little different scenario here on the Nasdaq. Things look to be moving higher. They look very positive on the higher time frames, not as positive on some of the intermediate time frames. So that's kind of where things look like as we work our way down. We can start to see some bullish candles in a pullback. If we break above there, more than likely everything's trending higher on some of these, except on the 60-minute chart, just like on the S&P 500, we're starting to get some lower highs. And so if we break up to another higher high and we get another lower high on these charts, more than likely that's going to be a deeper pullback again on the 240 and the 120, very similar to the S&P. So I'm still kind of across the index charts here. I'm still kind of looking for a little bit of a pullback at some of these key levels, albeit, the 2800 on the S&P or, the 2350 or the 2360 level on the Nasdaq is kind of where I would expect some of my pullbacks. So I just need to watch that. If I'm wrong, then we get a breakup through these levels, and I'm going to look for a breakup and a hold out of that level. The same on the flat level on the S&P, and so those would be some common things that I'd be looking for to see if we're actually going to get a complete run and we're going to get successive green candles, successive buying, moving straight up into that 7,500 level. Okay, so let's go ahead, take a look at for the S&P. Let's go ahead and take a look at the Nadex binaries and see kind of where we're at. Right now we're at 27.95, 2800 being the key resistance point right there. If I'm trading long, and I think perhaps maybe on a weekly scenario for the S&P 500 that I'm looking for, I've got 3 days left. I'm thinking we might punch through that 2800 level in 3 days. Or, we could just stay, above some of these levels and just be pushing up at 2,800. Say 27.96 would be one where we can get that for almost a 1-to-1 reward to risk. That might be an option for us. There really aren't a whole lot of other ones outside of something at 28.08, but again, I'm not necessarily interested in that one because it's 8 points above that key resistance level at 2,800, which I know is a very key level, and I'm not necessarily, looking for that breakout before the end of the week, because there just isn't a lot of probability around that. Could happen, but it's still kind of a 50-50 guess. So I'm not interested in any kind of guesswork. So the weeklies don't really set up very well for anything that I'm looking at. What I could look at are maybe some of the dailies. And so we've got a number of those to choose from. If we're currently at 27.95, looking at, a 27.96 would be fairly reasonable. And then we could look at a 27.93. Doesn't really give us a 1-to-1, but as long as we stay above that 27.93 level, then there's some option here. Right here, we don't have, for whatever reason, the Nadex platform isn't showing the correct offer and bid size, so the pricing there is looking a little bit skewed. I don't know why that's happening, but normally there should be, these should be all 100 or 50 or 250 on the offer size, and those are basically the market makers putting in volume. I think what's happened here is these are individual traders' numbers, and so we're not actually seeing the best price there for whatever reason. But give it a couple of minutes, and I think it'll probably should clear up. But there are obviously a couple of things here just shy, even 27.99, could be reasonable because it's still shy of that 2,800. And if we do get a run up into 2,800, then we could be able to liquidate that one at the at the strike price. So a couple different options there, and then we could even look trading some of the lower time frames up into that 2,800 level. So you got a number of options here at 27.99, 27.98, 96, 95. So a number of options here as to how that looks. Let me just do a refresh here and see if we can get some of the market makers bids in there. That's usually pretty very odd that it's looking that way. Well, that didn't help us a lot. Okay, I'm going to let that spin a little bit. Here we go. So we'll go back there, take a look at the binaries, the US 500, the dailies. Same thing. Okay, we'll have to give that some time to see if that'll clear up. Let's go back to the charts here. We'll take a look at foreign currency that I wanted to look at, the dollar CAD, and see what that looks like. And then we'll be able to go from there. So as I work through this one, be thinking to yourself as to what other charts you guys might want to take a look at for the last half an hour of the session here, and we can go through some of those charts and help you guys with that. First question out of the gate is Ed. He's got a question. He says, okay, Ed's helping me out here. He says they've been having a problem for the last few hours with the bid and the ask. Okay, so there's some issue there going on. So trying to get that resolved. All right, so here we are with the dollar CAD, taking a look at this, and what strikes me right off the bat, looking at the monthly and the weekly, is my eyes immediately go to the weekly chart. We've got higher high, higher low, higher high, higher low, potentially another higher low right here, but we got another 3 days for that to close out, but that's looking pretty solid right there. If that closes out nice and bullish, all the moving averages in alignment, looks like we'd potentially take another run at that 134 level. And as you can see, we have, with the higher highs, we have nice higher highs on the indicators as well. So that's all looking fine and dandy. Going down to the daily chart, which would be the next thing that I want to take a look at. You can see we have all the moving averages in alignment. Let me just get rid of that old fib chart right there. We've got a nice, from yesterday, we had a nice closeout of a bullish candle right here. At this point, I could do something like this. Look for a fib zone and draw my fib from the most recent swing low to the most recent swing high. Look for that pullback zone in and around the 50 and the 62% level. That 50% couples really nice with a couple of highs right there, 3 touches right there, and we're pulling right back into that level, and lo and behold, we get a nice small little bullish candle right above that level. So that looks very positive, a break above that level. And so that's very positive as well. I would think that coming a bounce off of that level would get us somewhere up to at least a 50% retracement of this run, which would be right around probably this 132 level right here, 132.3. So that would be a reasonable play for me, trading up into that level and then see if we get any sellers at that level. If we don't, then next stop potentially could be to retest that high at 134. But looking at these charts, if we do get back up to 134, more than likely we're going to have quite a bit of divergence setting up on the chart, looking into that level. And so got to be mindful of that as well. But everything sets up there fairly well as we go through the 240, the 120. I want to look for any opposing signals because there's some downtrends here. But what we have with these lower lows is we're starting to get higher lows on the indicators, as you can see. Higher lows, a lot of bullish divergence stacking up, which tells me we could get a decent pop off of this level that could break us up through this level right around that 131.6 level. And so that's kind of what the charts look like to me. You get down to the 60 and all of a sudden we've got the trend going the other way, and all of a sudden we have some bullish candles in the buy zone once again, and that jives pretty well with what we're seeing on the higher time frame. And that's how I kind of judge how I want to trade the lower time frames, by looking at the higher time frames once again and understanding that, hey, we just completed a pullback right here, and I'm looking for that bounce off of that level. And that's the same thing that the weekly chart is telling me as well. So all of those things right there, we can utilize all those things to identify the key levels that we're trading up into, identify keeping our strike price below that 134 level, potentially below the 132 level, and then look to keep those strike prices nice and close as we look for the market to run up and blow past those strike prices, and get the trade into some profitability very quickly, so we can utilize the break-even point then to get that trade to break even as quickly as possible. So that's really what I'm trying to do on my trading, and looking at the charts technically to identify where the highest probability setups are on the chart. There are no guarantees in trading, but I can, by doing this technical analysis, looking at price action, identify where the highest probability of a move going in the direction of the predominant trend is most likely. And that's pretty much the only thing that we can do within trading to give ourselves a good, valid trade setup, and then protect ourselves against risk, which is inherent in the Nadex binary contracts because they're a fixed risk proposition, which makes it very nice. Don't have to worry about stop losses as much. Doesn't mean that we don't understand where the stop loss is, so we can then calculate where our profit targets would be and where the key levels are, and see how all that stuff lines up. But we don't necessarily have to have a stop loss with a Nadex contract. We're basically only putting as much money in the market as we can stand to lose based on our reward to risk profile. Okay, so those are a couple of the setups that I wanted to go through you guys with, or go through with you guys. So let me just go through and see a couple of the other forex pairs that we can take a look at. I always like looking at the euro dollar and the Aussie dollar. Let's take a look at some of those. And if you guys want to think about some of the markets that you may want me to take a look at, I can take a run through those technically, and we'll see what the charts look like. Here we're looking at the euro dollar, and so if you recall a long time ago, I think we were doing one of these, and I put in a Fibonacci retracement from the swing high to the swing low because we were in a downtrend, and we had this double bottoming structure set up right here with a lot of bullish divergence at the breakdown to a new lower low right here, and it rejected that second retest and then shot all the way back up into that 62% level. And then I told you before, when that happened, I drew another Fibonacci between the swing low to the swing high and said usually if it rejects that level, sellers step in, it'll sell off all the way back down into this 62% level before potentially making another move back up to that level or to a new higher high, because here we have basically a higher high over this previous high. We have a higher low and we have a new higher high. And the only difference here is with this pullback, we've gone from a higher high to a lower low. So I don't necessarily like the way that stacks up. If we were just slightly above this this higher low right here, that would be good. That would give me an inclination that potentially we can, with a bullish candle, we can move back up to put in another higher low and then another higher high, which would be ideal. So not an ideal scenario right there as far as the price action is concerned. Sometimes this does happen. It's only, you know, just slightly below that level. But I need a little bit more convincing by the market to make sure that, that we're going to take back off to the upside. Also, we have that slight divergence from that most recent high, and a lot of that played out with that pullback into that zone again. As we go to the daily chart, we can see everything's kind of rolled over, mixed up until we get to the 8-hour chart where everything's in alignment. Pull back into the zone, nice bullish candle on the 8-hour chart. That's pretty good. Bullish candle on the daily chart, but there really isn't any formation that we can look at least here we have, you know, higher low, we have a higher high, higher low, and everything kind of moving forward. Just need to close out of that candle and a break above the high, and I think we could potentially continue this little trend here above that one, up into that 118 level. Then as you go down, get some more confirmation, pull back into the zone, nice bullish candle, break above the high, and right here we've got everything. We have the 10 and the 20 crossed over, so we can't use the 120-minute chart. We would have to be using the 240 and the 480 charts for our next move, but it looks like more than likely we're going to be taking a move back up to that 118 level, if not higher. And then that's kind of what I'd be looking at once we get a closeout here, is to look at trades basically below, strike prices below 118. And if we go to the Nadex contracts, we look at forex binaries, we look at the, what were we looking at there, the euro dollar, euro USD, and then we can look at, see what the dailies look like. They've got about 10 hours on them. That could be reasonable. Anything below, say, 117.8, you know, 117.6, 117.40, 117.20. We've got some here that are definitely below the that $50 level. That gives us a little bit better than a 1-to-1 reward to risk. And we've got about 10 hours of time for that to work out. And taking a look at the charts here, I don't know if that's necessarily enough time, because here it's an 8-hour chart. We're looking at 8 hours per candle, so it took 1, 2, 3, 4 candles, which is 32 hours to set up. We could get a decent move in the next 8 to 10 hours, but that's a little bit of a risk. So instead of looking at 8-hour candles, more than likely I'd shift it up to look at the weekly candle, and that would at least give me 3 days, which would be what, 72 hours, which would probably be more like it. 24 to 72 hours would give me like 3 to 5 candles on that 8-hour chart, which would be much more reasonable. And so here on some of these, we have this little problem here with the platform, so we're not seeing the correct prices, which is making it very difficult for a judgment call. But if anything, I'd be looking below that 118 level, like here, 117.75, I think would be reasonable. 117.25, reasonable as well. That one looks adequately priced by a market maker at 100 on the bid and the ask, just below the 50, so almost a little bit better than the 1-to-1 reward to risk on that one. And so those are some of the things that, and some of the types of reward to risk that we'd be looking at for, you know, for the euro dollar. So I just want to see a closeout of that 8-hour candle, and then we can take another look at that, see if it's right for a trade. What else here? We've got the euro dollar. Let's see. Okay, someone wants to see the dollar Swissy. Great. Let's take a look at that one. We'll look at the dollar Swiss to see how that's shaken up. And again, I'm always looking at the higher time frame charts first, regardless of how low I'm trading, even if I'm trading intraday charts. We've got a pretty key level up around here at that 102, say right around that 102, 103 level, say around 103. And we've got kind of a bottom level here, which has been typically right around, almost that 95 level, with some exceptions just below that. But here we've got some even a better level right around parity, right at 1. And so we've really been just having a sideways market right here on the dollar Swiss on the monthly chart. So if I'm looking to trade this, which I'm not really interested in this chart, but the only way the reason I'd be looking at the monthly is to make sure that I'm not trading at strike prices above that 1 level going long, and I'm not trading below this 95 level going short. I'd be looking to, to trade off of those key levels within that range. And being that this is several months worth of pricing, you'll find trends then on lower time frames, like the daily or the 8-hour, the 4-hour, the 2-hour, that kind of stuff. So here, another more sideways action. Again, don't like trading those charts. So again, have to look for the key levels to trade off of and then move down in the time frames to find something reasonable. Here we have, higher highs, higher lows. So coming off of that low level or that 95 level, and then starting that trending action going up is kind of what we're looking for. Here we're in, again, another sideways zone. Same with the 8-hour chart. So we're pretty close to that 1 level. Really not interested in flirting with that level much at all. Simply because there's been so much resistance there, as you can see. It shot up through there, broke through, but couldn't hold that level and just rejected off of there. More than likely, at this point, I'd be interested in potentially fading that level as it approaches 1, and then looking for it to pull back down toward the end of that 95 level. But at some point, the market is going to break out of that zone, and it's going to break out of this zone here and either move higher or move lower. But obviously this has been going on now for, at least in this area, since the middle of 2015. So I'm really not interested in any of these charts. So there's just better stuff to trade with better signals. And we have all of these other forex pairs. Really nothing going on here that I'm interested in trading on the dollar Swiss. We can take a look at the dollar yen. See what's going on there. If we can get the chart up. And everything's working a little bit slow today, but we'll get through it. Okay, so on the higher time frames here, we've got that pullback here, more than likely a 50% retracement of this run right here, and then a bounce off of that, and then kind of a little setting up maybe a higher low right here, kind of almost a little bit of a bull flag. Moving averages kind of getting into alignment here, but not quite. But if the market takes off right here, back up into this 115 level, we'll start to see all these moving averages more than likely start to fan out. So I don't want to jump the gun here and be too early on anything. I want to go through and look through the charts and see if there's any kind of a trend that I can look at on the lower time frames that might give me a reason to believe that we're going to get to 115 here in the near term. So as I move down to the weekly, we've got what looks to be a little bit of a flat level setting up right there. We got 2 touches at that 111 level. That looks pretty good. We've got a nice rejection candle right there. Moving averages all kind of coming together, but not quite all in alignment just yet. But nothing really telling me that we're not going to break that level and head higher, back up at least into this, say, 114.5 level. That would be a fairly decent run of a couple of points there. And then going down to the daily chart, we can see that all the moving averages getting into alignment. We've got higher lows, higher highs. sneaking in there. Daily chart looks very, very good. And then we look at the 8-hour chart, looks very good as well. A little overextension from the moving averages there. Here, we're not to a higher high just yet, so we don't have any divergence as of yet, so that's positive. Here we've got a higher high along with a higher high on some of the indicators, a little bit of a split decision there, and then a higher high here on the 120 minute. So as we go down and be looking for a pullback on or a setup on some of these charts, like the 60 minute, the 30 minute, something where we're getting this and we can look for another move back up to that 111, potentially see the market churning higher beyond that level. And that would be really something that I'd be looking for. I don't really have that much to work with right here. I'd be interested in probably a setup on the 240 and the 120. Let's see. Yeah, because I don't want to be trading up against that key resistance level until I get a break of that level. We could get a pullback and a rejection off of that level, get another higher low, and then come back up for a third touch of that level, and that would start to be an ideal point to start to look for trades for an imminent breakout of the level and then potentially moving higher. So we got a little bit more waiting time here and a few more candles to set up on the weekly chart. I'd be interested to see how that candle closes out by Friday this week. So I definitely keep this one on my watch list. Let's take a look at the Aussie dollar. See how things are stacking up there. So someone's asking me here, explain how I'm reading the bottom two graphs. This is the MACD indicator. This is the RSI, the relative strength index. And the way I'm reading these is I'm not using these as people typically use these. Most folks will use these when these two lines cross over or when the histogram crosses over, and they will trade short based on those lines going down, or the line crosses going up, people will trade those going long. That's not how we're using the charts. I don't think it's correct to use the charts that way. Other folks will use these two lines right here as the overbought and the oversold zone. So they'll start shorting when the lines get up to these levels, and they'll start going long when the lines are down along these levels. And that's not how we use these charts either. What we're really looking for is we're looking for convergence and divergence. So as charts put in highs, consecutive highs, we're looking for consecutive highs on the indicator. So we want these indicators to be trending in the same direction as the price action. Price action is going up, and this thing, all of a sudden, the indicator starts putting in lower highs, trending down with each higher high in price. That tells us that there is some major price indicator divergence, and in this case, that would be a bearish signal on this uptrend right here. So that's how we're using these, and so I'll refer to those often as we go through the charts to help you understand. So right here, didn't really break up, maybe to a slight higher high, which it looks like we did. Slight higher high right here. You can see we had a significantly lower high than we did on the previous high. Same thing on the RSI. So that tells us that, hey, it's more than likely double topping structure, just did a retest. A lot of sellers taking profit right here. Plus you got people potentially going short based on the strong bearish divergence right here. And all of those things together puts a group of investors all selling, the Aussie dollar. And that's why you get the sell-off based on that technical response and reaction to the price action. Okay. So a lot of sideways action right here, not a whole lot, not getting a lot of clues of things that I want to do here. This looks pretty nice. Very nice downtrend here, very nice and controlled, everything fanning out. Have some slight divergence right here, but if we get a nice bearish candle in and around the zone right here, that may be good enough for a retest back to that 73 level. As of yet, there's really nothing on the chart telling me that that's going to happen. And then If anything, some of the lower time frames are looking like setups to go higher. So really nothing consistent here. All the charts are up, down, up, down. So again, really indicative of the sideways action that we're seeing here on the higher time. So really Aussie dollar is really kind of a no trade for me. We didn't look at the pound dollar. We can take a look at that one as well. I've got a few more minutes here on the clock. Okay, so similar to the euro dollar, we bottomed out here, took a move back up into that 62% level, pulled back off of that. You know, the same thing as I talked about on the euro dollar. The way I'd handle this is by putting in a fib retracement from the swing low to the swing high, and then looking for that pullback into that level, which is right around that 130.679, and you can see what happened. That's the 50% level right there. Pulls back in. This is very typical of what happens after you get a move like this and a big bounce into that level. It just kind of bounces between the fib levels. And so it bounces back here, then you have buyers stepping in at that 50% level. Or if people were shorting off of that 62% level, then they're covering down here at the 50% level. So you have people buying back their short positions, and you have people that are looking at this chart going, hey, I want to get long for a bounce at this 50% level. And then all of a sudden you have a lot more buyers in the market than you do sellers at these key levels. That's why we want to pay attention to these key levels and all these technical indicators, because these are key turning points in the price action. And so they provide great opportunities to look for trading strategies around these key levels of clustering price information and just key levels in terms of numbers. Okay, so key level right around there. Excuse me. And nothing really here on the weekly. Everything's kind of crossed up right here. If we are going to get a bounce off of that level, so we've got downtrends here. It's only until we get to the 8-hour chart when we start to get a little bit of upward alignment. And then the 240 and the 120 still don't have a lot of alignment here. And then as we go down, still have a lot of sideways price action. So really nothing here. I need a little bit of a trend going here to see if we can get something started. And there's really just nothing telling me that we're going to start a trend right here. Or at least to me, I don't want to be on calling the initial start of a trend. I'd like to see a nice bullish candle here, maybe close out by the end of the month, and then see a nice trend here started for maybe the next couple of candles, next couple of weeks, to get something moving, to give me some confidence that there are some other investors that are interested in getting long, this particular forex pair. So those are there are a number of things there. We looked at a couple of opportunities, and any other questions that you guys have for me as far as some of the technical analysis that we're looking at here, and some of the different setups that we're seeing in the price action? A little look at silver. Let's take a look at gold real quick. Gives you guys a little contrast between the index markets that we looked at initially this morning on the S&P 500 and the Nasdaq. And I covered this one probably a month or so ago, whenever it was, or maybe several weeks ago. And we were somewhere up around this 1350 level, as I recall, and the market was, the index market was down, and now the index markets have moved back up. They look like they're moving back up into that 2900 level or 2800 level, past that on the S&P. And so when the market moves up, then gold does the opposite and it moves down. And so this is obviously, gold is just a kind of a safe haven. So when the equities markets sell off, people are selling equities and they're moving their money into a safe haven like gold. And so all of a sudden you get a lot of buyers coming into the gold market, and more buyers than sellers is going to push prices higher. And that's why you get that sector rotation, and you get some of that reverse correlation going on, where we're moving lower on gold as opposed to the equities prices, which are moving higher. So we have some key levels down around here, which again are down around the 1230 level, the absolute dead low right around 1165 right there. So you can look at the equities markets and see what happens around some of these some of these key levels, and kind of see if there's news that coincides with some of those levels as well, and then you might see pullbacks on the equities markets, and all of these things kind of move in tandem against each other with equities. So here again, a lot of sideways action. Not really interested in gold at this point. The equities markets, like we looked at before, have a nice breakout right there. Here we don't have any setup. If we had a couple of touches right here for a break lower, and I could see a break higher on the index markets and a break lower here, that'd be an interesting trade, looking to get lower into some of these key levels, but I don't really see that on this chart. We do have some trend flow trades going short, so a nice rejection candle there with everything flowing to the downside. Rejection candle right here in the opposite direction, don't really like that. If we do come down and retest this level right here, we've got a lot of bullish divergence showing up. So there aren't a whole lot of things good about the charts on gold. So I'm really just going to shy away from that. I think I have better charts to look at for trading on some of the other charts that we're looking at. Let me answer up a few questions here as we wrap up. And can you explain what divergence is? Yeah, so we've gone over this a couple of times. Divergence is, we're not looking to get into all of the details on some of this stuff. Let me see if I can find. Here's an example of convergence. Convergence is just the opposite of divergence. So convergence is when we have a nice trend going lower or higher. Here we have lower highs and we have consistent lower lows, and the indicators are doing the exact same thing. They're basically mimicking the price action. You see the lower highs, lower lows on the price action. The indicators are doing the exact same thing. Okay, lower highs, lower lows, lower highs, lower lows. If we get another lower low right here and all of a sudden we get a higher low on the indicator, then all of a sudden we have the indicator starting to trend upward while price continues to trend lower and make lower lows. That is divergence. Okay, right now we have everything in sync. So we have convergence, which means that the downward trend is very strong and it isn't showing any signs of weakening. When we start to get the divergence signal, that shows us that the trend is weakening to some extent. Doesn't mean it's going to reverse. It might mean that it just needs a relief rally to continue the downtrend, but it gives us some clues that, hey, the trend's weakening at this point. We've got maybe a bounce occurring at a key significant level, and then we can start to stack up some things to say, hey, it's better to stay out of the trend at this point, wait for a bounce back into a sell zone on a higher time frame, and then engage the short trend or the short side at a later date. So that's what we're looking for with the divergence and the convergence of indicators and price. We'll talk about those a lot more on the advanced course, and I believe that's available on the YouTube channel, and you guys can get a call into the folks at Nadex, customer service side, help you locate those, and you can go through basically a 3-hour course that'll show you everything related to convergence, divergence, and all the setups that we're talking about here. Ed's asking, where can I acquire these charts with these kinds of tools? Well, Ed, this is, I'm just using TradeStation. You can actually use the charts on Nadex are actually pretty good. They just won't have the monthly and the weekly charts, but you can get a lot of the same tools and everything just on the Nadex charts, and then you'll also have the binary ladders stacked up right on top of the price action, which is pretty nice as well. But you can use something like a multi-charts. Go to multicharts.com. eSignal is another one. But the thing is, you're going to have to pay for the data, which can get a little bit expensive. So you can get the same exact chart setup like I have here on the Nadex charts. And let me, since we got a little bit of time left, I'll show you how to do that. Got about 6 minutes left here. Let me see if the charts are working here. Let's go to a quick chart. And we'll see if we can, seems like Nadex might be having a little bit of a problem here with the platform. I'm not sure why that is. Yes, we're not getting anything just yet. Let me try something else here, see if one of these links works. Let's try the, oh, here we go. Okay, so we got one on the euro. The euro, so you can just blow this up. And you can have a nice chart like this. It overlays all the binaries on it. I've got mine automatically set up, and you can just save the setup. So I've got the MACD and the RSI right here. I've got my moving averages, the 10, the 20, the 50, and the 100. So I can change those, you know, to reflect whatever it is that I need. We normally go with the 10, the 20, the 50, and the 200. So you can go in and change those and then get them color coded the same way that that we color code ours. But yeah, so pretty decent charts, and then you can just click through these time frames pretty easily. Like this can be the daily chart. You can go to the 4-hour chart. So you're not going to get all the charts side by side, and that's why I use my chart, so I can kind of talk through this stuff a little quicker since we're under the time limit with these webinars. But here, doing it by yourself, you know, you can just click through the 2-hour, start to look for your setups. Nice setup there, bullish candle in that zone. Go down to the 1-hour, and so forth. So so you got some great charts there to utilize with Nadex, and it doesn't cost you anything. So let me just wrap up here with one last slide, if you guys will, and let me kind of talk through this, show you how you can engage a little bit more with Nadex. And give me a minute here. Computer is taking its sweet time. And let me just get my charts set up here on my side. All right, so just the last slide here, and giving you guys an opportunity to understand how you can get connected more with Nadex. You know, what Nadex is doing here on these Tuesday events is they're just making an investment in your success as an investor. And that's why they sponsor these events like today, to help you manage your risk, to help you understand how to read the charts technically and accurately, to give yourself a slight advantage in your trading schematics. A couple of different ways that you guys can get in touch with Nadex. Phone and email listed here for any questions that you might have. Or you can ask me your questions right now, just as you've been doing. Just use the question box on your screen. Demo accounts also available, just to provide you some familiarity with the contracts that we've been talking about today. For current members of Nadex, if you'd like to begin trading again, just log in to nadex.com. Take advantage of those advanced education webinars on the YouTube channel. It'll take your trading, help take your trading to the next level, possibly. If you're new to Nadex, you don't have an account, but you'd like to sign up to set up an account, again, just go to nadex.com, click on I believe it's the orange box in the top right. It says sign up. Just fill in your details there. Someone from Nadex will respond via email to get you started. Before you sign off, there is a short survey upon your exit. Please let us know your thoughts and how we're doing on these Tuesday sessions. So again, I'd like to thank you all for joining us for this morning, and this will conclude the webinar content for today. If you guys have any questions, I'd be more than happy to answer those at this point. But otherwise, we'll be wrapping up here pretty shortly. Thanks for the compliments, guys. Glad you enjoyed the session. Any other questions before we wrap up?